Number one thing to pay attention to is next week. I believe it's Tuesday the 8th. America has elections. If Republicans end up winning that, expect a market rally. I'm just talking about history, what historically happens. The second year of a Democratic president, that is what happens historically. Number two, watch Dogecoin and its implications into what? Twitter. Twitter's going to be a lot more than what you might think at face value. It's not just going to be weird meme posting. It's going to get more broad. Keep that in mind. They are also already okayed and ready for Ethereum and Bitcoin. Can those all go together? Do you have any of those? Maybe you're going to wait until they get the big crash. I don't know. Let me know how you're playing those. But just keep that in mind in the big picture. There's always more than meets the eye, especially in the big billion-dollar deals. Number three, if we tighten too much, we don't have tools to fix the boo-boos, said Mr. Jerome Powell today. What does that mean? If they make the economy so bad that its stuff just totally implodes, he says we have tools at our discretionary resource is to be able to what? Quantitative easing, to money print, okay? Whatever. So that's positive news. That's totally positive if you really get how the Fed works. Everyone knew that was coming, but at least he already hinted that QE's coming after he messes up the whole world, right? It's the Federal Reserve, right? He also said it's very premature thinking about pausing rates. So they're going to keep making stuff worse. They're going to keep selling assets, taking money out so banks can't even loan. Not like anyone can get approved for stuff right now. But just saying. Households still have money and they keep spending was one of his okay reasonings to be able to go ahead and tighten down on people, put the thumb on the forehead. He said households are still spending. They are. We've brought this up for a long time, but remember they're using credit cards. They've been out of their savings. Most are out of savings, but they're using their credit cards. Credit cards had a record fill-out form beginning of the year, right? More people filling out than credit card forms than any time ever in all of history. Then what they do, they went and maxed them out instantly, okay? It takes time for those big macro numbers to actually show up versus what we talk about on the channel. That's why we're usually about 6 months ahead, right? I said the window for a soft landing is getting narrower, is getting maybe harder for us to ever even think about hitting. He's saying it's probably not going to be a soft landing. He's blamed on inflation. He brought up Putin. He said not that many job loss stuff. No one knows if we will have a recession or not. So he didn't completely deny the R word, the recession word. But he said no one really knows. So honestly, it was kind of like negative. We had crazy whipsaws today, and we were swinging the heck out of it. But he's admitting what we already knew. If you've been watching this channel for any amount of time, we already knew basically everything he said, but at least he's admitting it. He didn't give us what we're going to do next time, but he said we are open to the fact that we could be raising them for next time. So if the next time they have a meeting like December, it's already November, they could raise it, because right now everyone's thinking 50 points, 0.5, but they could raise it up to 0.75 or something. If that happens, it'll crash then, but let's think about right now. Dude, all big tech and stuff, the QQQ and NASDAQ, they're still going to be hurting for a long time. Even Apple, like 10 minutes or something before the FOMC meeting came out, they said they are going to freeze and pause hiring through 2023 amid recession fears. Apple. Dude, if Apple's not hiring, did you know China locked their the Foxconn factor down, which I'm okay with. I'm anti-Foxconn, all right? Not for slave labor, none of that stuff. Call me weird, but they shut that down in the name of the C beer stuff from that March 2020 area, right? But that's the reason. But I think we got a lot of war that's going on, right? China's like, we'll just shut our whole economy down. Good luck, the world. This is very macro what's going on here. Mr. Will Clemente said, a lot of discussion about the state of Bitcoin miners lately. They're not safe either. In fact, they're probably all going under, at least the American ones. All the ones on the stock market, I'd say, are very high risk of going under. Here's a look at the breakdown of public miner BTC holdings. These miners have 33,855 Bitcoin in a total for a USD value of $675 million, which is nothing, especially when their market caps are way over that, right? I don't know. Core, like none. They sold all their Bitcoin. They're out of money, right? If the Fed didn't exist, the currency of Bitcoin money, I'm sure these guys would be fine. But again, this is a Fed problem. But remember, I think that this is also could be a war problem too. Did you know there was places around the world in the past couple of years that made it illegal to even mine Bitcoin? Hut 8, they have a decent amount. Riot, Marathon, Hive, Bitfarms, Argo, BitDigital, CleanSpark has just a little bit left. I'm all for expansion of growth and stuff, but if you're holding a currency in something that it's holding maybe better than the USD, but they're all just completely overextended for the most part, right? I still don't believe Riot and Mara are actual companies. I think they're totally fake. Hut 8 might be okay. I don't know though. Does anyone know? Let me know in the comments. Why am I telling you that? Because if you're in those, you might want to sell them. Will also said the HODL multiple compares a miner's market capitalization to their Bitcoin holdings. Lower multiple, larger relative Bitcoin holdings, with Core having sold most of its Bitcoin. Its HODL multiplier is now off the charts, bro. Crazy. It's another reason why I try not to play crypto in stock market. I only do it on the side because I can trade it 24/7 all day long. If I want to get out, I can do it any second of any day, right? Businesses that are reporting earnings go into something called a blackout period, where if they're going to report earnings next week, they cannot sell trade shares because it kind of gets like insider trading, right? If you know you're going to have an awesome press release come out, you can't like buy the day before if you're the CEO. So all those are coming off. So the businesses are buying back shares, doing stuff like that. But then the big thing is the market maker bros have to balance their sheets. What does that mean? Some of this does trickle down from the Fed through the banks, but realize even if they go all the way short, people are like, why don't they just crash everything? It's because they really can't. They still have to be hedged, north and south, bull and bear. So they can only be bear for a couple of weeks. And then they go bull. That's how we try to do it here, right? About every 2 weeks. Just go the opposite way. They have to spend money on buying stonks. Even the people selling the stuff, the dealers, they have to buy stonks. And a lot of it has to happen, or historically does happen, the first couple weeks of November, which is right now. That's why you see this big old spike starting the first of the month. If we didn't have that doomsday FOMC today, I'm sure we would have really rallied a lot harder than we did. Same old thing, same old chart. There you go. Pause it if you want. Take a look at it. Good buddy Tyler Cat, he's in the BitDoctor group, BitDoctor forum, all time. Check him out. This simplifies the charting right here. This is the bear case right now. He's got this beautiful pendant purple thing. Topaz, not topaz, whatever it is. He basically thinks, we're kind of stopped out at his 50% retracement or wherever he took this from up here, I'm guessing. But he thinks we can make it all the way down to the bottom of this thing, which we totally could. If it's going to happen, though, I think it's probably going to happen like now, maybe up to elections. It could happen in the next month, though, too. You got to come up with your own thesis on it, or just wait for the price action and then just adjust to that. Right? But where's we going down with this? He thinks around like 3,300, 3,400. Remember what I've said? I've shown these macro charts 1,000 times. Bring her right on over. Like, this is the simplest one I made for everybody this last month. We made this way back here. Basically, if stuff gets close to the top of the box, short. Go bear. Buy bear ETFs. If stuff gets to the bottom, clink, like it did, you buy bull stuff. You long stuff. That's about it. That's what the market makers are doing. Remember what we were just talking about? They have to buy and they have to sell because they're always hedging, because they're always longing. So they have certain exposures and loans and percentages, and it's where we at. We hit our basically double peak right on top of this thing. Did you draw that in? That's my question. Take a look at Mr. Eloquent Trades. Some people can just read his charts way easier, probably because they're super clean and easy. This is a bear case. We're just gonna gradually, not straight down, but we're gonna just end up going down to basically kind of where Tyler was at. He's even showing, we're gonna have some regroups, of course, because you gotta have that every couple of weeks. You're gonna get the ups and the downs, even though the macro is down, you're still gonna get little rips in there. But as long as you buy the top of channels like this, you're probably gonna be fine, because the stuff in the middle really doesn't matter as long as you bought when everyone was afraid here and when everyone was afraid down here. If you're having trouble, draw this out. Go to my video October 1st, like right before October 1st. All right, just remember that. That's the rest of the year there. Okay, another Eloquent Trades chart. We're basically, this is a micro zoom in point. He thinks we've got a bounce point coming up, basically right here. He thinks we're gonna probably keep dripping a little bit in the next couple days, probably the end of the week, right? He's saying 3,700, 3,659. He's got a target, and then he thinks we're gonna resume. So that's a play. It's a little bit more down next couple days. I could totally see that into Friday, and that would make sense because that could be some drama over the weekend or whatever. And then remember the voting thing on Tuesday of next week. This would make a lot of sense if you're thinking we're gonna get a rally into it the last couple of days because people get excited. Maybe some more drama happens on Twitter. Can you think of anything that might happen that has to do with elections and Twitter and Elon Musk and all that? Do keep in mind the big two, the SPX, the SPY, and the Russell. They're technically darn real close to basically showing overextended in time to what? Short, sell. See right here. When they get high on RSI, this is a simple RSI. This is everybody knows RSI if you've been charting, right? They're getting high. Small caps in weird times like to outperform. That's one of the reasons we like playing them. We've been using TINA and TISA, Russell, IWM, same thing. But see how it's overextended past the 70 on the RSI, 70, but the SPY isn't there yet. So maybe the SPY has to get above 70. Oh, and then we'll all go down together. Maybe that's going to be the moral of the story. How about this? Another view. This is my main chart I just made up here. I included Eloquent Trades Happy Shack over here where he thinks we're going down. These yellow brick roads are different paths I think that we could totally take. I'm leaning this one here where tomorrow, or maybe midday Friday, we're gonna just start going up right away. It doesn't feed too well into the whole election thing unless it just keeps going, and it takes a little while. So like here would be the 8th, it's vote day, vote day. So this would still fit in if it did this one. This question mark is the line in the sand. It's either gonna come up here, do an exhaust rally, and get rejected by what? This VWAP. Remember we talked about this VWAP, this gray dotted line. Support resistance, the best kind there is a VWAP, all right? The most buys and sells and people want to buy and sell right there. If it does, it's probably going to go down and hit Elo's first target down here, and then right at election time, Monday, Tuesday, start rocking up around 4,000-ish. More than likely, around 4,000-ish, you're probably better off in bears. That's what most of the money is telling me right now. We could, of course, just rally to 10,000 from now, but we're dealing on percentages. We're counting cards at the blackjack table here. We're going with 60, 70, or 80% odds versus that one lottery ticket that might get us a 20% win. We don't want that. The other scenario is we just keep dripping hard for the next 2 days. Right? So Thursday and Friday, we just keep going. We can blast through Elo's first targets. Boom, 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 boom. He got 2 more for you down here, all right? Pause the video, take a screenshot of this if you want on that other one too. But we got 35, 32 down here. We got 34, 40 down here. And then revert up, and then revert up. This last one actually takes us below our local lows over here back in mid-October. So Yellow Brick Road is what it's looking like it's going to happen. Pay attention to your VWAPs. Where do we stop today? I've been charting the ES, which is like the futures version of SPY, right? Because you could trade that almost 24/7. So we would just play in that. It's not charting as accurately, like hitting fib levels or even the VWAP levels, as well as like SPX, but honestly, SPY itself has been charting better. But you see where this landed. SPX literally landed perfectly on the VWAP. See that shelf, that Audi belly button sticking out right there? Perfect. If you come over to ES1, it's not really perfect. Even this retracement we got here, there's a fib line coming back that we pulled. It had a higher high versus SPY. So what am I getting at? Like, a lot of pros will say only chart ES1, but whatever one is most accurate to you, you're going to be darn close and still ahead of the game if you're charting anyway. Do SPY or SPX or ES1, but I'm just letting you know, ES1 has not been as accurate as the others. Even for options, expire, max pain stuff. Let's look at the US dollar. Do you like dollars? I still like dollars. I just don't like the people running it and the fact it's not backed on anything, any real asset. The macro vision on that too is, remember, we also have like the geopolitical thing where we have all the negative swap nations we've been talking about for years. Now we're creating an alliance. They're stopping using USD and using gold-backed stuff. Are they going to go to gold back? Are they going to have their own cryptocurrency backed by gold? Does that already exist? You should know that. JP Morgan, by the way, is sneaking out and pairing up with Meta right now, with Facebook. They want to be a middleman for everything, like a new PayPal, but it's JP Morgan. Is that crypto? I'll let you figure that out. This is what I got right now for the US dollar. Basically, we're looking like we're in a big bull flag, but this is, again, stopping at crucial levels. Remember that this is inverse of SPY, so SPY stopped at a crucial level, but this stopped at one going up, right? So that means we're usually going to then revert. This is what I'm looking at. If it stops here, and we have that local bull case on SPY, we're probably going to get down until we rally for, if we're going to rally this year, it's going to be like within the next 3 weeks. So just know that. Very high likelihood. Because even though the Fed is going to keep quantitative tightening things and pulling money out and blowing up money, like ripping money and tearing it apart and then creating more still, every time something's swapped, the market makers still have way more money they're injecting and have to inject into the market by buying just regular shares of stuff. Where are they putting their money? In the Dow Jones, like industrial stuff, Caterpillar. Y'all ever driven a tractor? Caterpillar tractor? 3M? Oil, gas stuff. Those boomer stocks. They're outperforming basically everything right now. Let's bring this over. This is the one you need to watch if you're going to be looking at yields. This is US02Y. US02Y is the ticker. US government bonds 2-year yield. If this is like DXY as US dollar. If this goes up, technically the stock market should go down. If they rally together, this one's probably the daddy. So this one will probably win, which means SPY will probably go back down. This one basically did a double top perfectly today. So again, just like we're talking about, SPY stopped perfect, the DXY stopped perfect going up. This goes like the DXY, it stopped perfect going up today. So as long as this doesn't get above where we were, these highs from into October 20th over here, I'd say bulls are probably in a pretty good position to grab the horns and ride that puppy all the way to Sweden. What do you think? Take a look at the charts. If you have any more questions, put them down in the comments. Any more suggestions, whatever you think, let me know. In-game target, by the way, to refresh, I'm still macro bear for sure. You know, the economies worldwide are completely screwed, tech screwed, you know, laying off people, yada, yada. But it doesn't mean we're not going to have rallies into it, okay? And that's what we're trying to do. If you don't have time, you're not going to put in the time to do it, then again, revert back to the easy guy. I don't even know where that window went. Go back to the easy guy plan right here. You know, just draw out a big old box and say, all right, we've been trading between way up there and way down there, about 4,000 down to what, like 3,300. Make a box, put a line in the middle. Once it gets to the line in the middle, start dripping out of the ones that you bought at the bottom. It's that easy, but you just got to take at least a little bit of time to draw a box, make a trading view account, do that. If you don't know how to do that, watch my trading view charting video. It's super basic, super easy. I appreciate you watching this. We'll see you out there tomorrow.